welcome back to the program. You are watching ASEAN Business Report, and this is the latest update from Myanmar, as Myanmar's fast-growing economy is spurring global media and advertising agencies based in Thailand to spread into the country, where international clients are eyeing further expansion. And the neighboring nation with a 60 million strong population is opening more doors for international investors after major powers like the US and some European countries lifted and eased economic sanctions last year. Ogilvy and Mather, a global marketing communications company, became the first international agency to set up business in Myanmar by acquiring a stake in Yangon-based Today Advertising in May last year. Through this partnership, Ogilvy provides an array of services, including public relations, event marketing, product launches, promotions, creative concepts, media planning, media buying and production. Chuozenko Thailand also now has two subsidiaries, which are Chuozenko Myanmar and AdAsia, to extend its client base in that country. Chuozenko Myanmar was established in Singapore and Myanmar. The Singapore-based unit is wholly owned by Chuozenko Dynamics, which is 82% owned by Chuozenko Thailand and 18% by Japan-based Striders Corp. The Singaporean unit owns 100% of the Yangon-based unit, and it expects to generate profit next year. Many international ad agencies based in Bangkok are conducting a feasibility study on entering the country. Leo Burnett Group said that its parent company based in Chicago assigned the Bangkok office to survey business opportunities in Myanmar, where it is seeking a possibly joint venture, partnership, or direct investment. Aegis Media Thailand, the country's second-largest media agency, expects to form a joint venture with a media agency in Myanmar this month. The Asian Development Bank, or ADB, sees the outlook of Myanmar's economy over the near term as positive, bolstered by strong export earnings from resource-based commodities and an increase in foreign direct investment. And Kunjarawi, ADB also forecasts Myanmar's gross domestic product accelerating from 5.5% growth last year to 6.8% this year and 6.5% next year.
And also, Myanmar is going to be hosting the World Economic Forum on East Asia in Naypyidaw in June, around the 5th to 7th, where the Myanmar government expects that it will use that opportunity from the international event to discuss possible investment opportunities as well. Well, moving on to Laos, as a local report has indicated that the Laotian government has received a much larger amount in royalties from the Nam Ton 2 dam in 2012 than the previous year. Electricity developer Lao Holding State Enterprise, or LHSE, reported recently that the government received almost 119.3 billion kip, or $14.91 million in royalties from the project last year. In 2011, the government received about 93.3 billion a kip, or $11.66 million in royalties from the hydro project. The enterprise reported its annual meeting in Vientiane regarding that. Now it is expected that the government will earn more than 15.6 trillion kip, or over $1.95 billion from the hydropower project over the 25 years concession in period. Now, also the Nam Ton 2 project will earn almost $247 million last year, including over $234.4 million from sales of energy to the Electricity Generating Authority of Thailand, and also $12.3 million from sales to the Electricité du Laos.
And now on to the next story from the Philippines. Shell companies in the Philippines urged the Aquino administration to lay down necessary infrastructures that would allow more investors to invest in natural gas projects. Shell President Edgar Chua recommended that the Philippines need to push for a more aggressive use of natural gas for both power and transport. This includes the need to put up a one-stop shop for the natural gas industry, establish gas quality standards, provide tax incentives for the early switchers, and fast-track the required critical infrastructure such as the $2.1 billion Batangas Manila natural gas pipeline project and transmission lines. Shell is conducting a feasibility study that will look into the viability of putting up an LNG terminal hub near its refinery in Tabangao, Batangas. If Shell pushes through with the project, the company will need to invest about $1 billion. The Department of Energy, for its part, is now preparing to draft a natural gas master plan that will harmonize all the planned natural gas infrastructure by the private sector, including those by Shell First Corp, which is building a $2.3 billion natural gas portfolio of power plants and terminal, and the state-run Philippine National Oil Company. The Philippines government is embarking on its own natural gas project, which is the Batman 1 pipeline project, as it is bent on pursuing the massive use of alternative fuels given the current global oil price volatility.
And now let's turn our focus to Vietnam as according to the state treasury, Vietnam plans to boost domestic debt sales to a record 150 trillion dong or $7.2 billion in 2013 as falling property prices and stagnant bank lending supports demand for the government notes. The Southeast Asian nation will sell 120 trillion dong of bonds with maturities of between 2 and 15 years and 30 trillion dong of treasury bills, according to Tran Min Hung, the deputy head of the treasury. The country sold an all-time high of 141 trillion dong of securities last year. He said this is a chance for the country when difficulties in other markets have slowed banks from extending loans and prompted investors to put money in bonds, which are relatively safe and profitable investment channel. The Vietnamese government is struggling to raise revenue this year after it granted tax exemptions, reductions, and payment delays to help businesses cope with the slowest annual economic growth since 1999. Now, the World Bank forecasts in December that Vietnam's gross domestic product will increase 5.5% this year, compared with 5.03% in 2012, which would be the third year of below 6% growth. And Vietnam's property market has been frozen and faces many difficulties, with about 112 trillion dong of real estate projects unsold, with credit growth may remain slow in the first few months of 2013.
And South Korean Foreign Ministry said that North Korea could not unilaterally nullify the armistice that ended the 1950 to 1953 Korean War and pledged to tackle any attempts by the North to scrap the bilateral agreement. Last week, North Korea said it would tear up its armistice deal with Washington and threatened military action against the U.S. and South Korea if they went ahead with their annual joint military drills. Despite the threat, South Korean and U.S. troops began the two-week war game called Key Resolve yesterday, which is a computer-simulated exercise involving 10,000 South Korean and 3,500 U.S. troops. The Foreign Ministry said that the armistice could not be dished unilaterally, citing the principle of international law. Tensions have ratcheted higher across the Korean peninsula since the North under leader Kim Jong-un, who took office just over a year ago after the death of his father. The isolated state launched a long-range rocket last December and in February conducted a third nuclear test in defiance of international warnings. And meanwhile, the joint military drill Full Eagle began on March the 1st and will continue until April the 30th.
We're going to take a short break for you guys to breathe before we come back for CEO Talk today on the Thai bond market. Stay tuned.